GM, just a quick one before we get going. So, as you know, the Blockmates podcast is for informational and entertainment purposes only. Certainly shouldn't be considered as financial advice. We have absolutely no idea what we're talking about half the time. So, any investment decision you do make should be based on your own research and your own understanding of the risks involved. One more thing as well, there's around 50% of people who listen regularly who aren't subscribed yet. So, if you please could just do us a favor and hit the subscribe or the follow button or the like button. Helps content grow, helps us grow, helps it reach more people like yourselves, and it means the world to us as well. So that's the last I'll ask of you. So yeah, let's get to the episode.
That's it, ladies and gentlemen. We are back once again with the Orange Finance team. We have Sino and Kohaku. Welcome, gentlemen. How are you both today?
Yeah, it's doing great. Yeah, doing great.
Excellent. So I know we've spoken in the past a little bit before, and I know we're going back some time now because, you know, it feels like a lifetime ago that we're all at Token 2049. But I'd love to hear your experiences with Token 2049. How did you find it?
We actually didn't buy a ticket. We just zipping around all the side events as much as possible. And we met a lot of many VCs and protocols, and also users as well. And we had a wonderful time over there. And actually, we are in the bear market, obviously, but we never feel that over there is a bullish atmosphere. You've been there as well, right?
Yeah. So we went, and I'd completely agree with you there. Despite us technically being in a very doom and gloom bear market where number is only down at the moment, apart from the odd green day, I think what Singapore and Token 2049 highlighted really was that. You know, there are still a lot of passionate people in the space that are still building at a rapid pace. And it's good that the runways that projects had and had acquired from the previous bull run haven't quite run out yet. So it's a very refreshing thing to see.
Yeah, right. Exactly. So yeah, as a protocol, co-founders, both we are co-founders of Orange Finance. So I think it's very good opportunity for us to focus on the real regulation in DeFi spaces. In the bull market, everyone focusing on the token rewards, inflational token rewards, and Ponzi mix. Users go to there, and now it's a good time for DeFi builders to work on the real financial regulations, real pursuing protocols like AMMs and the LPD-Fis and LSD-Fis. Yeah, it's a good opportunity for us.
Yeah, I totally agree, because my opinion is that those that are building in the bear market now, and the ones that can capture a long-standing audience and really get that community buy-in and loyalty, I think for when the bull run comes, whether that's next year surrounding the halvening or whether it's the year after or the year after that, I really do think that the foundations are being laid down in a time like this. But before we go on to the bull run, which is some time away, I'd love to hear more about how you both got started in crypto. Sino, do you want to take it first?
Yeah, absolutely. So I get into crypto when, I don't remember the years, but around when COVID crisis began. So before that moment, I was an international student in the United States, and I was just using the crypto to do the international money transfer. And using it was expensive, but using Ethereum, since I had interest in it, smart contract stuff. And eventually, the COVID crisis has begun, and I went back to Japan, and trying to do something in the blockchain space. And I met Kohaku here, and we started a startup in this field. And then I started my career as a backend engineer there. And then I pivoted to my work role to the smart contract developer, and then worked as a smart contract developer for a few years in this space. And during this period, the 2 years is very enough for me to catch up and get some skill set as an engineer. And I also experienced auditing as well. with you may know the name Watchdog. Is a individual auditing team and ranked #1 and at Code Arena and Sherlock as well. And actually, like my one of the best friends in DeFi spaces, I work with them and experience audit as well. And then turns out Orange Finance, I'm doing the project manager here and still do the code reviewing to make sure the security stuff in this project. Yeah, that's pretty much about myself.
So you've got a very well-rounded set of talents, from obviously like the developing side, audit side, and then project lead, and that's really good to hear. Kahaku, over to you.
Oh yeah, thank you. Thank you for inviting us, and I'm really glad to be here. I'm co-founder of Orange Finance, and I mainly work on the business development side of things. So I did my backstory. I did my master's in finance at the University of London, and around 2018 I got into crypto, but it was just like a little, like buying small amount of ETH. And after I got my degree, I went back to Japan and I started a company. And actually, at that time, my investor of the company advised me to start NFT business, and Sino and me started the NFT market and in Japan. But and it was actually the NFT bubble, and by 2020, I was more into DeFi and NFTs, so I jumped into the DeFi space and worked on a few DeFi projects. And now I'm with Orange Finance. So yeah, this is pretty much my backstory.
Very cool. Very cool. So let's talk about what you're doing and what you're building at Orange Finance. So how did Orange Finance come to be? What's the origin story there?
So it's, we are 3 years old Dejans in this field. So I started from the providing liquidity to, the pancake swap. It's very good. So, excuse me. So in the bull market, we are always focusing on the token reward stuff, inflational token rewards, and get into the bear market. And now, like, we want to do the real investment stuff and earning the real yield from DeFi protocols. And when I look at the ranking of the protocol fee revenues, is the first place is actually Ethereum chain itself, and second place is Uniswap, and third one is maybe the Binance chain, and the fourth is Aave. It's a lending market. So in a DeFi ecosystem, like AMM and lending market is the two top that generating the free revenues and real yield. So I was trying to do the provide liquidity to earn the real yield, but when I look at the fee revenues, the fee APR is over 100%. And turns out when the price changes dramatically, you will get an impermanent loss, the divergence losses. And when price drops, the fee revenue cannot overcome the fee revenue, and I will end up losses. So I was thinking, like, somehow providing liquidity, not gamble, but making it a real investment. And to do this, it is essential to have a hedge position behind the liquidity positions to balance out the risk of market risk. So the typical providing liquidity is like a gamble. When price goes up, you have no risks actually. But price drops, there will be ultimate losses, and your portfolio value eventually goes to zero. So it's so biased, and no one knows if price gonna go up or down, right? So it's more likely a gamble, not investment. So I'm a small developer, so I thought we can make liquidity providing to real investment means making it mature so that user can do liquidity providing stuff in mature manners. That's actually the beginning intuition of the Orange Finance.
Okay, brilliant. And then where did the name come from? Because it seems like a bit of a no-brainer, but also one of those names that you'd have thought would have been taken a long time ago. Where did you come up with that?
Yeah, actually, you are right. Range, it's actually a no-brain stuff. It's from when you provide liquidity, you gotta set the range, right? So you set a range. It sounds like orange. That's how we come up with Orange Finance. So we didn't, I think, really well for this one. But but Orange is just catchy and sounds familiar. So we think it's a good name.
Yeah, that's a smart branding and a smart play on words. Fantastic. So, what in the shortest format, like more of a TLDR format, just so then people can understand quite easy. What is Orange Finance then?
Okay, let me explain this part. So like Orange Finance is, as Sino explained, an advanced liquidity management protocol, which is tailored for concentrated type liquidity dexes, such as UniV4. And we also implement there's a hedging strategy behind the vault to offset losses due to price fluctuations. So we basically try to maximize the capital efficiency of profit and profitability of liquidity providers on AMM by simplifying the liquidity provisioning experience and try to hedge the market risks with that hedging strategy. So that's the basic explanation of Orange Finance. So user flow is quite simple. We accept single-sided token, for example, USDC for Ether USDC pool. So only thing you have to do is deposit USDC into a vault, and that's it, basically. And from them, the vault moved those deposited USDC into Aave, a lending platform, as collateral, and we borrow ETH against that USDC. That means that makes short position of ETH against USDC, and we put those borrowed USDC. We borrow those borrowed ETH and remaining USDC together, and we put them together into DEXs. So you now have LP position on DEX and the short position of ETH against USDC.
Okay. And like, what kind of strategies are you implementing in your vaults at the moment?
So now we are implementing data neutral strategy. Maybe Sino can explain better than me.
Yeah, now we only have a data neutral strategy. We used to experiment a dynamic hedging strategy that analyze the price trend. So when a bull market, we don't want to hedge, but in a range market, we don't want to hedge as well. But only when the price is in a downside, we want to hedge. But it's very difficult, almost impossible to predict the price trajectory. So it doesn't work. It simply doesn't work like that. So now we are only having a data neutral strategy that's balancing out the risk of the both side, price goes up and down, to provide liquidity more predictable as an investment. So that's what we have right now. So there's two good things when we have a delta hedge behind a liquidity position. One is the more predictable APR. When we have a hedged position, balanced out the risks, we can simply compare the volatility at the moment and also trading volume of the AMM to see if it's profitable or not. And the second thing is actually a developed version of the first one, but we can inherit profitability indicator from the Tradify. which is comparing the implied volatility and realized volatility. And realized volatility is the real volatility, taking the historical data. And implied volatility is it's like a market prediction of the volatility. So when implied volatility is higher than the realized volatility, it means there is a relatively higher trading volume compared to the real volatility, which means liquidity provider has more chance to earn the fee revenue compared to the risk, which is the volatility. So this can be applied only when we have a delta neutral position. So this makes Orange Finance next level to compare to other liquidity managers.
Wow. Okay. So it's essentially providing the user with a little peace of mind, so that they can sleep at night and not have to worry about their DeFi degenerate bags getting absolutely wrecked and going to zero. Am I right in saying that?
Yeah. Right. So we do. We are running a rebalancing bot in the behind. So the position is maintained automatically, and also when there is a shock in the market and drastic price change happens, there is a stop loss feature, and it avoids liquidity position having a lot of losses as well. So we provide while providing liquidity, it's a V3 concentrated liquidity market, and maintenance is too complex. Orange provides a very simple UX with strategies.
Okay, so then let's move on, because I know there's a very big narrative that I've been seeing on Twitter quite a lot, and I read your post a couple of days ago when you released it, and that's LPD-Fi. I always want to say like LAPD, but LPD-Fi, so liquidity providing derivatives finance. And I've seen that this is an area and narrative that you guys are really going to be picking up and playing with. I'd love to know what your thoughts are around the narrative, and more importantly, what you're actually going to be doing with it, because I've seen that you've got some very strong potential partners that you're going to be building on top of.
Yeah, now we are talking with Smileys and Dopex V2 and Infinity Pools, those cool guys. And yeah, I watched your video with Smileys, which is very cool. So LPD-Fi, yeah, you said liquidity providing liquidity. Liquidity provide derivatives. So the thing is that the protocol LPD-Fi is emerging on top of AMMs, which brings liquidity providers another form of incentives, like let's say options on top of AMMs. So now liquidity providers not only earning fee revenue from swap, but also revenue from selling options. So liquidity my brain is white right now.
All right, so like as Sino explained, LPD-Fi is utilizing LP token or AMM, and by doing that, users will get benefit from like not only getting trading fees, but also they will get option trading fees or perpetual trading fee on top of those protocols, such as Smiley, Dopex, and Infinity Pools. And so as we are trying to maximize capital efficiency and the profitability of liquidity providers, that opportunity, we believe we see quite big narrative in this space. Because actually, first of all, the AMM is the revenue machine in the DeFi space. As Sino explained earlier, AMM is generating more and more revenues in this space. So utilizing this system, I mean LP tokens, has huge opportunity and huge potential in the space, we believe. And yeah, so that's why we are now developing both on top of LPD-Fi protocols, discussing with those notable protocols at this moment.
You can think about the LSD. Oh, sorry.
No,
you can think about.
carry on.
You can think about the LSD-Fis. Why people loving LSD-Fi is because they can earn the real ETH. It's ETH, but it's real ETH for the ETH maxis. So LPD-Fi is also emerging, but and making the things more mature. But only difference compared to the LSD-Fi is user experience. LSD-Fi is very energetic, but also very simple for experienced DeFi users. But LPD-Fi it's going to be like option and prop shows, which is very difficult for users, average users, not professional ones. So it's a very good thing. It brings more opportunity for DeFi users, but at the same time, it's very difficult for them. So it's very similar to what happened in the Uniswap V3 concentrated liquidity AMMs. It's very good, profitable, but just difficult. So Orange Finance is here to wrap up those complexity and utilize those financial tools, options, and provisions, and like making a structured product. And with profitability simulation using the Monte Carlo simulations, for example, and also auto rebalancing. So it's on top of the LPD-Fi is on top of AMM. So we still need a ranging for some protocols. And also we provide since we automating managing, we also provide limited losses. We implement a stop loss for emergency cases to avoid user to have a lot of losses from those emergency situations. With those kind of stuff, we provide user, we deliver the financial product to users without any complexity, with a very simple UX.
And are you going to be offering like new products? So obviously we know like Dopex deals with options. Is that like something that you're going to be exploring?
Yeah, so when we launch our bot on top of, let's say, Dopex V2, user is basically providing liquidity to AMM via Orange Finance, via Dopex V2 into AMM. And AMM earns fee revenue for liquidity providers, and Dopex V2 earning the fee to users as well. And Orange Finance provide a simple UX to users. So it's very difficult for users. So when Dopex V2 and some like other very difficult, complex protocol launches, user wants to interact with it, right? To interact with the smart contract of the newly launched application, maybe for airdrop. But this is user really doesn't understand what they are doing with like selling options, buying options. They are not really doing the investment. And also, as a product, the protocol is not getting real users. The user is just interacting with contract for future opportunity, maybe. But some users must not understand the product itself. So Orange Finance bridge those complexity to users.
Okay, so that will make sense. A couple of months ago, Uniswap obviously announced V4, which everybody was super excited about. There's loads of threads on it, and it's all to do with Uniswap hooks. Now, I know you guys have been exploring the hooks and just generally the hook narrative, but I'd love to find out more about what you're actually going to be doing with these hooks, if there's any specific hooks that you've maybe tried on testnet, and then how these hooks would actually apply to the vaults and the product that you're dishing out.
Yeah, so about our research related to the hooks and Uniswap X, we haven't we haven't launched any announcement yet, but it's undergoing. So there will be a huge paradigm shift when Uniswap V4 and Uniswap X it's already beginning, but launches. One is the hooks feature. This brings huge benefits to liquidity managers since we can inject arbitrary execution before and after swap, and also before and after provide liquidities. So there is so we are like essentially this to AMM. So we are relying on the profitability of AMM, right? So, and there is huge discussion in this field since there is arbitrageurs. So in the AMM, there are only two parties, people who swap and people who provide liquidity for swaps. So when swapper get a value, eventually, means the liquidity providers are losing. And there is an arbitrager, arbitraging between DEX and CX. And since DEX AMM price always follows the CX prices, there is a chance to arbitrage always. And this brings 100% lose to the liquidity providers. It's called a lever. But with the launch of the hooks and also a dynamic fee, is actually already a couple of the AMMs implement a dynamic fee, but dynamic fee is pretty effective to reduce the impact of the arbitrageurs to the liquidity providers. So in such ways, there are like so many discussions, not only dynamic fee, but also other options and methods to reduce this impact of the arbitrageurs. Means that the profitability of the liquidity provider to AMM has much room to improve. And so that liquidity manager is very keen to work on the hooks to provide a fundamental improvement of profitability to liquidity providers. So that's about the hooks. And also there's Uniswap X, which is to AMM. It's kind of very serious conversation for AMM since there will be CX liquidity flow into on-chain swap. So when swap happens, there are DEX liquidity, but also no. So the thing is that okay, sorry.
Yeah, so like as Sino said, the off-chain prices lead and while on-chain prices follow, basically, because off-chain price has a better pricing ability. And after Uniswap X comes, as it can route swap transactions to any source, we suspect that it can be like the majority of non-arbitrage or profitable transactions would be routed to off-chain liquidity, as I said, due to its better pricing ability. So that can be the problem after Uniswap X. But we try to solve this problem. And actually, our research member went to NYC and got and developed the Flux idea, and I got prize from Uniswap, 1inch, and Flashbots. And the idea is like, so the idea is like this. So on-chain liquidity lend the liquidity to off-chain feeders or market makers. So they utilize on-chain liquidity to fulfill the swap requests, and they tend to have a better pricing opportunity. So they do profitable trade compared to on-chain liquidity. But on-chain liquidity providers can lend those liquidity off-chain liquidity, like market maker, by using our developing hooks. It means like they can be profitable as well by committed to off-chain liquidity. So that is the basic idea of what we are doing as a result of our relentless research around those LP profitability stuff field. And yeah, so like we're going to announce this actually tonight, and you can check more details in our thread on X.
Okay, awesome. So it feels like we're super early on this, which is always good. And it's what everybody wants. Now I know there's going to be some listeners out there that might be thinking, okay, this sounds, you know, all quite complicated and all quite complex. So I think what would be really useful is okay, let me rephrase that. Who is this product really designed for? Like, is it designed for somebody who needs to have a lot of trading and market knowledge? Is it for somebody, you know, could my mum just, for example, set up a wallet, you know, put like 500 shekels on there and then add into it? You know, who are you really trying to, you know, target with a product like this? Because it sounds fantastic.
All right, yeah. So we basically developing our product Orange Finance for your mom. So like the users who has not enough knowledge for financial stuff and statistical stuff, but we want everyone to use DeFi protocol, and we want everyone to provide liquidity. I mean, like we want everyone to get benefit from the DeFi ecosystem, and the liquidity on DEX is essentially really important stuff for the entire DeFi ecosystem. So by simplifying the liquidity provisioning, we try to deliver the profitable opportunity to everyone in the DeFi space, but not only DeFi space, but eventually everyone in the world.
Awesome. So hey, Mum, do you hear that? You can use Orange Finance. It's super simple. You've just made a product that my mum's just given a thumbs up and a high five to. I absolutely love it, gentlemen. And more importantly, you know, what's coming up over the next 3 months? Because I've seen in your Discord that you guys are building and you're building fast. So have you got any like sneak peeks you can share with the listeners?
Sure. So currently we have 5 votes on Camelot and 1 vote on Uniswap VC, but we're trying to expand this vote across different DEX and different chains. But first of all, we are now working with Camelot for our upcoming integration on top of their UI, and also like farming rewards farming rewards to accumulate more liquidity from DeFi users and incentivize them to deposit liquidity through Orange Finance. So that is the first step. And after that, we are going to expand our votes, as I said, to multi-chains and multi-dexes. And in the long run, so it's going to be like within 3 months, I mean, within this year. And in the long run, we are aiming to maximize, as I said, capital efficiency is our mission. So we are now really focusing on research of Uniswap X and UniV4 Hooks and LPD-Fi as well. Now we're working with those very excellent LPD-Fi protocols, and we try to develop a vote. I cannot say when it would be, but we try to develop those votes as soon as possible.
Awesome! It sounds like you guys are cooking up an orange storm right there, which is really awesome to see. No, guys, I think you've given a really good overview of, you know, what Orange Finance is, the way you're actually like going to be hitting up and taking advantage of, you know, some potentially huge upcoming narratives, and got some very good releases. Do you guys have any closing words at all, or feel free to share your socials? Where can everybody find you?
All right. Yeah. So we keep developing the more votes, and we're trying to improve our strategy behind the votes. Everything is to deliver a profitable opportunity for everyone in the world. And yeah, so I want everyone to be part of Orange Finance, and we're waiting for you to join our Orange Finance community. And please stay tuned for our upcoming exciting announcements.
Awesome. I will leave all of your links to your socials in the description below. For anyone who's listening out there who hasn't yet subscribed, go and hit that subscribe button, whether it's on the left, right, or above, whether you're on YouTube, Spotify, or Apple Podcast. Gentlemen, it's been an absolute pleasure having you on the show. Sino, Kohaku, thank you so much for joining.
Thank you.
Yeah, thank you very much.